Hi, Andrew Cooper here from Advice for Living Financial Planning in Diamond Creek. This is our budget update for 2018. I've decided to do today's budget update in two parts, one for people who are working and one for people who are retired, because on the whole the budget measures break up pretty neatly into those two spots. Overall, the budget provides some good things, but I'd say probably not a huge amount for anybody, but as I say, not a lot of downsides. Now, for work, this is the video for working people. For anybody who has read the papers and, or heaven forbid, even watched the Treasurer last night, you'll know that there was quite an extensive plan on the tax brackets for income earners. It stretches out over 7 years and makes changes to most of the brackets. Pardon me. It's the changes are initially probably not enormous, and given that they stretch out over such a long period of time, I would be surprised if they actually end up working out the way that they've planned. I think, yeah, we could have like 3 governments between now and the final implementation. So my thoughts are they're probably going to be changed over time. Most importantly is what's going to happen next year. There are 2 issues next year. One is a tax offset, and the other one is a very slight change to one of the tax brackets. Now, the tax offset for people who are earning less than $37,000 a year, so that's next year, 18-19, there will be a $200 tax offset. Now, that's not a refund, it's only an offset against the tax that you would pay. For people earning between $48,000 and $90,000, there will be a $530 tax offset, again against the tax that you would pay. And then for people over 90, up to 125, it gradually phases out. So, as I said, it's only an offset, it's not a refund. And that will gradually alter over the course of the 7 years. The plan is that those offsets will alter. There is an existing low income tax offset, and these are in addition to that. The other change is to the 32.5-cent tax bracket. Normally that ends at when somebody earns $87,000 a year. Over that, they go to the 37-cent tax bracket. That's going to be increased next financial year from $87,000 to $90,000. So that's a $3,000 increase. And based on my calculation, that means $150 a year extra. So hardly a king's ransom, but I suppose better in your pocket than theirs. For working people, that's pretty much about it. The only other issues are anybody who is working and receiving carer allowance. Carer allowance, so when you're looking after someone who has a disability or special care needs, that's $127.50, as I recall, a fortnight. It is not currently means tested, is going to be means tested, but it will only affect people earning more than $250,000 a year. I find it hard to believe there would be many people getting care allowance on more than $250,000 a year, but apparently there are. Otherwise, I suppose they wouldn't have brought it in. The only other changes which may be of interest to you are there are some changes to self-managed super fund rules. You'll now be able to have 6 people instead of 4, and this will assist people with self-managed super funds if the Labor Party's plan to stop the net refund of franking credits comes in. Then for super funds where they have people in pension phase, it will be of value to bring people in who are still working, because they can claim the franking credits against the tax that the super fund would pay if you've got people in accumulation. That's a little bit complex, but if you've got a super fund, you can now have more people in it, and there's also some compliance issues. So for working people, that's pretty much about all there is. For people who are over age, pension age, and or retired, I've done a separate video because there are a string of things that just don't apply to working people. So thanks for watching. Feel free to pass this on to anyone who you think may be interested, and likewise, if you've got any questions, or alternatively if you know anyone who wants some help, then please have them contact us. Thanks so much.